High above the Kármán line, a silent orchestration of silicon and krypton-fueled Hall effect thrusters is effectively re-architecting the geopolitical map of the 21st century. While the public views Starlink as a philanthropic endeavor to bridge the digital divide for rural schoolhouses, the cold, hard reality of the orbital ledger suggests a far more predatory endgame: the establishment of the first vertically integrated planetary monopoly. We are witnessing the birth of a sovereign-as-a-service infrastructure where Starlink isn't just an ISP, but a kinetic layer of global hegemony. By deploying 6,000 and eventually 42,000 low Earth orbit satellites, SpaceX has bypassed the terrestrial regulatory bottlenecks that have long chained telecommunications giants to local jurisdictions. This isn't just about high-speed internet in the Andes. It's about Musk owning the proprietary gateway through which every byte of future high-frequency trading, military drone telemetry, and encrypted sovereign communication must pass. If the 20th century was defined by the control of maritime choke points like the Strait of Malacca, the 21st is being defined by the control of the V-band spectrum. The trap isn't the price of the dish. It's the irreversible architectural lock-in. When a nation-state integrates Starlink into its critical infrastructure, as we've seen in active conflict zones, it enters into an asymmetrical dependency where the kill switch is held not by a government, but by a private board of directors. The net information gained lies in understanding that Starlink is functioning as a loss leader for a much larger orbital enclosure movement. By saturating LEO with mass-produced hardware, Musk is effectively denying orbital slots to competitors through a strategy of spatial exhaustion. We are no longer looking at a race for space. We are looking at the privatization of the vacuum itself. As the debris-to-data ratio tilts, the barrier to entry for any subsequent competitor becomes exponentially more expensive, leaving the entire global south and decentralized workforce tethered to a single, proprietary orbital backbone. This is the toll booth for the galaxy, a system where the transit fee isn't just capital, but strategic autonomy. To understand how Starlink achieved this tactical superiority, one must look past the 2019 launch dates and into the foundational, semantic nodes of SpaceX's internal propulsion logic: vertical integration and iterative manufacturing. Unlike Boeing or Lockheed Martin, who operate on cost-plus contracts that incentivize bloat, Musk applied the first principles framework to orbital logistics. By driving the launch cost of a Falcon 9 down to roughly $2,500 per kilogram, and aiming for under $100 with the Starship architecture, SpaceX solved the most persistent bottleneck in telecommunications history: the gravity well. This allowed them to treat satellites not as bespoke, multi-billion-dollar gold-plated assets, but as disposable, modular hardware. This shift from high reliability, low volume, to mass-manufactured attrition allowed Starlink to outpace the regulatory cycles of the ITU, International Telecommunication Union. By the time competitors filed their first objections, SpaceX had already secured the first-mover advantage in the Q and Ka bands, effectively squatting on the most valuable electromagnetic real estate in the solar system. This strategic context is rooted in the transition from traditional geostationary (GEO) satellites, parked 35,000 kilometers away with crippling 600 millisecond latency, to a dense mesh of low Earth orbit (LEO) nodes at 550 kilometers. This reduction in the physical distance of the signal path is what enables Starlink to disrupt the subsea cable monopoly. While terrestrial fiber optics suffer from the refractive index of glass, slowing light down by about 30%, signals in the vacuum of space travel at the true speed of light. This isn't just a technical trivia point, it is a fundamental shift in the time value of information. For high-frequency trading firms and military command and control, the 20-millisecond advantage offered by inter-satellite laser links, ISL, is worth more than the entire consumer market combined. SpaceX didn't build a better internet for you. They built a low-latency weapon for the financial and military sectors, using the consumer subscription model to subsidize the R&D and deployment of a global surveillance and communication net. The unit economics of Starlink reveal a brutal reality of CapEx intensity that would bankrupt any firm without the Musk premium on its valuation. Each V2 mini satellite costs approximately $800,000 to manufacture, yet the launch cost, when internalized via SpaceX's reusable boosters, is estimated to be under $15 million per flight of 22 satellites. This creates a marginal cost of deployment that is 10 times lower than its nearest rival, Project Kuiper. However, the true dark schema lies in the predatory pricing mechanisms used to capture emerging markets. In regions like Nigeria and Brazil, Starlink has historically slashed hardware costs by up to 50% below manufacturing par to achieve rapid market saturation before local fiber optic infrastructure can mature. This is a classic blitzscaling maneuver. Capture the customer base, lock them into a proprietary hardware ecosystem, the Starlink Dishy, and then slowly pivot to enterprise-grade pricing once the local ISPs have been liquidated due to an inability to compete with orbital latency. The architectural genius, however, is the Space Laser Mesh. By utilizing laser crosslinks, Starlink satellites can route data across the globe without ever touching a terrestrial ground station in a hostile or regulated territory. This creates a shadow internet that is functionally immune to national firewalls and terrestrial censorship. From a data sovereignty perspective, this is a nightmare for regulators, but a goldmine for Starlink's asymmetric return on equity. By capturing 0.1% of the global high-frequency trading traffic, Starlink can generate more revenue than 10 million rural subscribers combined. Furthermore, consider the Kessler syndrome insurance factor. By owning the world's largest constellation, SpaceX effectively dictates the rules of the road for space traffic management. They are currently performing over 5,000 collision avoidance maneuvers per month. This high-frequency operational data provides them with a proprietary spatial intelligence map that no government agency, not even NASA or the ESA, can currently replicate. Beyond the hardware, the semantic ID of Starlink's success is its integration with the Starshield military variant. While consumer Starlink is marketed as a utility, Starshield is a dedicated government business line designed for Earth observation and secure communications. The 2024 leaked contracts suggest a $1.8 billion classified deal with the NRO, National Reconnaissance Office, to build a swarm of hundreds of spy satellites based on the Starlink bus. This is where the toll booth becomes literal. By leveraging the scale of a consumer product, SpaceX has created a dual-use technology that allows them to provide the primary sensor layer for the U.S. Department of Defense. This creates an impenetrable moat. Even if the consumer division never reaches profitability, the strategic necessity of the platform to the American military-industrial complex ensures an endless stream of non-dilutive government funding. Starlink is the first sovereign tech monopoly that is too integrated to fail and too widespread to regulate. The pivot occurred when Starlink transitioned from being a last-mile provider to a backbone provider. Initially, the vision was to sell to individuals in vans and remote cabins, but the true strategic shift happened with the introduction of Starlink Aviation and Starlink Maritime. By targeting the high-margin transit sectors, Musk effectively captured the mobile command market. When you look at the 2026 landscape, Starlink isn't competing with Comcast. It's competing with the entire concept of national borders. By signing deals with major airlines and shipping fleets, Starlink has created a seamless global network that ignores the Westphalian system of state sovereignty. This shift forced a regulatory capitulation from governments worldwide. When a nation tries to ban Starlink, as seen in various geopolitical flashpoints, they find that their own elite, their military, and their critical corporate entities are already dependent on its low-latency feed. The trap is that by the time a regulator realizes the threat to their digital sovereignty, the cost of disconnection is economic and tactical suicide. Furthermore, the integration of Starlink with the Tesla bot and Optimus ecosystem represents the next phase of this strategic shift. We are moving toward a decentralized edge computing model where the Starlink constellation acts as the global nervous system for millions of autonomous AI agents. In this scenario, the value is no longer in the bandwidth, the pipes, but in the compute at the edge. By placing small servers on the satellites themselves, SpaceX can process AI workloads in orbit, bypassing the latency of sending data back to a terrestrial AWS or Azure data center. This is the ultimate vertical enclosure. Musk is building the hardware, Tesla, the energy source, SolarCity, the transport, SpaceX, and the communication layer, Starlink. This creates a closed-loop economy where the toll booth is at every intersection of modern life. The company has shifted from being a satellite operator to being the operating system of the physical world, where every autonomous movement on Earth is synchronized via a private orbital clock. The lesson of the Starlink trap is a masterclass in structural predation. It teaches us that in the modern economy, the winner isn't the one who builds the best product, but the one who builds the most indispensable toll booth. Musk didn't win by playing the telecom game. He won by changing the physics of the game's infrastructure. To achieve an asymmetric return on equity in the 2020s, one must seek to own the basal layer of a system, the point of no return where a customer's exit cost becomes infinite. Starlink is a reminder that capital is a force multiplier for engineering, and when used with sufficient velocity, it can create a monopoly that is physically unreachable by the slow-moving hands of terrestrial law. As an investor or a strategist, the takeaway is clear. Identify the orbital bottlenecks in your own industry. Look for the places where you can build a proprietary gateway that competitors must use simply to exist. The future belongs not to those who provide the service, but to those who own the vacuum in which the service resides. The question is no longer whether you will use Starlink, but whether you can afford the price of the toll.